Ever wonder why no one advised you to buy stocks when Nifty was at 15,200 levels few months back, but you started seeing buying recommendations across news channels and YouTube to buy when it was close to 18,000 levels? And now when it is slightly corrected from 18,096 levels to 17,300 levels, again you started seeing videos for selling. Probably you would have noticed that in last few weeks the buying related videos were gone up because someone need to sell their stocks at higher prices and was accumulating buyers for it, and it's retailers who always get trapped to it, especially when Fed pressed full throttle with quantitative tightening, commonly known as QT, by tightening their books to its full potential in September, increasing it from $47.5 billion to $95 billion per month. Remember back in 2018 when they did QT, in few months markets corrected in double digits. This time Fed is doing QT by roughly the double amount. Of course, there is another side of market participants that expected market won't behave in the same manner. For them, have attached a link of Bloomberg that agrees to it. Similarly, right now, no one was publicly talking about FIAs buying 85,000 crores of options. Typically, they don't buy options to take markets up. But you must have heard from last few weeks that FIAs were net buyers. But just see the figures of last 1 year. You will realize for yourself that these big guys turns buyers just before they start major selling. To offload their positions, they need buyers. Buyers comes when markets go up. So they take markets up and then offload their positions. Through this video, I want to share facts that will give you numbers, and then you decide for yourself that is this the time to go long, go short, hold your positions or sell all your stocks. I will cover pointers on both the sides and then will share some macro pointers that will assist you in your decision. We have discussed in our previous videos on how to have a profit recession, and through other videos and Telegram channel shared ways to make money from any fall. But in this video, I'm not telling you to buy or sell anything, but to get your facts correct. In last few weeks, US markets lost more market capital than our whole GDP and in multiples of whole crypto market. So we need to understand that word decoupled can't hold true in today's interconnected economies. So let's not fall prey to buying dip videos, as even WSJ mentioned that.
But so far in 2022, buying the dip hasn't paid off as well as in the past. Markets are volatile.
This video is an effort from my side to share a piece of advice. Be logical. So let's see some important factors. How are they placed currently and what you should see before initiating your trades. Let's start with rupee. When Nifty was close to 18,600 levels, then rupee was close to 75. Now when it hit 18,096 levels, rupee was close to 80 and currently it shot beyond 81.2 levels, which is a bearish sign. Now let's see dollar index. When Nifty was close to 18,600 levels, the dollar index was close to 93.7. Now when it hit 18,096 levels, dollar index was close to 109.7 and currently it shot beyond 113 levels, which is a bearish sign. Let's see gold. When Nifty was close to 18,600 levels, then gold was close to 1769. Now when it hit 18,096 levels again, gold was close to 1664 and currently it has fallen below 1643 levels. This does not give a clear picture. But if you take the ratio of Nifty to gold, that will give you a clear picture that it is also a bearish sign. Let's see S&P 500. When Nifty was close to 18,600 levels, then S&P 500 was close to 4519. Now when it hit back 18,096 levels, S&P 500 was close to 3901 and currently it has fallen to 3693 levels. This gives clear picture that US markets are underperforming Nifty, which clearly indicates that Nifty has lot to catch up on the downside. That's clearly a bearish sign. Same analysis if you do on Nasdaq, it's giving more sign of weakness, which is also a sign of bearishness. Similarly, Dow Jones is also giving bearish sign. If you analyze crude, always remember if the crude prices fall below certain levels or in certain pattern, that indicates slowing global economies, which is clearly a sign that in these days, thanks to recession in US, energy crisis in Europe, slowing China, etc., it's also giving a bearish sign. Other emerging markets including Korean stock index, KOSPI, MOEX for Russian index, Hang Seng, etc., are also giving bearish sign. Indian forex reserves have fallen to 2 years lows of $550 billion from the peak of October 2021 when it was $642 billion. This is also a clear sign of bearishness. GDP has also fallen, which is a sign of bearish markets. Looking at on the positive sides, those things that can take markets up, you have to see like when markets were close to 18,600 levels the last time, there the PE ratio was close to 28-29 levels, which right now is in the range of 20.7. On an average, we have been in the range of 19 to 20. This shows that we are not that expensive as we were the last time. This is a sign of bullishness. GST collection, if you see FASTag collection, etc., have gone up, which is also a bullish sign for the economy. On top of it, we are getting more exposure in MSCI index, and now India is also getting exposure in bond index, expected to get exposure. That means during asset rotation, there will be more money in Indian bond markets that can float to equities. On macro levels, European market is talking to take measures to reduce the energy crisis. On the other hand, after Saudi rejected Americans' request to increase oil production, US is planning to lift ban from Venezuela and Iran that will increase the oil supply globally and control the rising prices. Now I try to share pointers to take a rational decision. Now you decide for yourself. Don't let any videos or news to impact you and your decision, right? Think logical. If you want to make decent returns from the markets in long run, you need to make sure your basics are right and your direction play is correct. For example, my view is bearish as of now. I have been sharing my trades in my videos as well as my Telegram channel. In last 3 falls from 18,600 and twice from 18,200 levels, I shared trades and made good returns. I know I can't time the market to perfection, so I bought time this time as well. I personally bought deep in the money puts for March series as my major trade. So I have bought roughly 7 months of time. Based on pointers shared in this video, you can easily understand that markets can't remain decoupled from international markets forever. Something similar happened in 2008, where for a short period of time we decoupled from the international market, but later we underperformed them immensely. I understand when markets are bouncing from every level, just giving gap up opening every day, buyers making more money every week, and BS losing week on week. That's a time when many logical traders give up, especially weekly option traders who are getting wiped out thanks to the volatility in the market. In the upcoming video, I will share the technical analysis of weekly time frame and how we can proceed trading for upcoming weeks. Remember my friends, at 15,200 Nifty levels, fear was getting sold and you were made to go short. And then when the market came close to 18,000 levels, greed was being sold and you were asked to buy. Stay rational, and for more database view, subscribe to my channel. Like the video if you like the content. Comments are always encouraging. We'll continue to share more knowledgeable videos and other stuff. So stay tuned to Options Decoded. See you in the next video, and as always, happy learning.